Okay, hello everybody. My name is Matthew of Junior Resource Investing. I'm hosting a sixth panel with CEO Rick Van Nieuwenhuyse of Contango Ore here today. Contango Ore's Manh Choh gold project in Alaska is just a year out from its first pour, and I think that's an awfully exciting time for me to be meeting with this guy here today. Just a reminder that this will be recorded. And I'll just give a really brief intro here before I hand things over to Rick to introduce us to his company. I just wanted the framing I wanted to have for this context, this conversation, is this concept of asymmetrical risk versus reward, right? That obviously the objective of any investment is to identify that asymmetrical relationship between risk and reward. And that metric doesn't or shouldn't change whether the returns are 10% or 1,000%. In the junior resource sector, I think it's a natural desire for people to want to be a part of that discovery story, right? It's naturally an attention-grabbing story, but that isn't always smart money, and that isn't always a smart choice, if you ask me. Instead, I would counter that near-term, fully permitted, fully financed producers like Contango could and should be a critical part of any resource investor's portfolio, specifically and particularly for that reduced risk they present while still presenting that outsized opportunity to actually capture serious alpha. So there's my intro. Rick, it's nice to meet you. This is called a fireside chat, and we already talked about this. I do not have a fireplace in my home, but if I know Northerners, you've got one just within arm's reach, and you got one right behind you there. So you're true to form here. So thanks for being here. Nice to meet you, Rick. And how are you today?
Great, Matthew. Great to be on your show. Contango's, where, as you say, we're our Manh Choh projects, our flagship project. We're on the cusp of production. We're actually mining now and stockpiling now at the Manh Choh site. This is located in Alaska. We're a 30% owner. We joint ventured the project with Kinross, basically to take advantage of their underutilized mill at Fort Knox. And our ore grade is 8 grams per ton, which is unusually high for an open pit mine in today's world. I think it's, if not the highest, it's certainly one of the highest open pit gold grades in the world. And so we can afford to run of mine ore, put that in a truck, haul it up, take it up the highway to Fort Knox. It's a public highway. So there's literally no permitting involved in doing that. I mean, obviously you've got to have legal loads and legal trucks and drivers and all that, but there's sort of not an extra permitting step. Obviously we had to permit the mine, and that was done last year. We started construction, and as I said, we're now mining and stockpiling. So the next final part of the process is to process the ore through the Fort Knox mill and get gold out the other end, and that should occur in first half of next year. We'll get guidance here from Kinross when we have our next joint venture meeting, which should be in middle of November. So things have gone according to plan. I think we were kind of joking a bit about that. It's been a quick 2 years since we did the joint venture with Kinross, and we spent a fair bit of money in that process. It's a joint venture, so we share in our 30% of the capital and operating costs. But it has gone according to plan. Got the permits within a year, and now we've got the construction completed, and we're mining. So it's again, last step is running it through the mill and getting gold out the other end, which again we expect to have sometime in the first half of next year.
Yeah, 70-30 JV. Yeah, I mean, I think that you kind of mentioned a couple of things that I do like. I mean, I think it's testament to good management when things go on time. I mean, you Alaska, great jurisdiction. That's a testament to management. Picking the right company to JV with to keep things on time. I mean, it's a testament to things are going right, and that's takes a little bit of luck, but it also takes some skill to get there too, right? And so I think maybe I want to ask you just a couple of slide deck kind of questions just to help set the table here, maybe, right? Just for maybe if people haven't heard your story yet. But so let's just start with share structure. I mean, this is, I think, people always start, this is one of those questions where it's always gets asked, and most of the times it's kind of a boring question that they're all roughly the same. But Contango is a bit of an outlier. Do you want to maybe explain that for us?
Yeah, so we're not your typical junior Canadian company, because first of all, we're not Canadian. We're US. We're only US listed. We're NYSE American listed. We have less than 10 million shares out, fully diluted. which is highly unusual. Yet we trade pretty well. I mean, we trade probably $500,000 to $1 million a day on typical trading day. So in terms of liquidity, you can buy stock and sell stock and get in and out. Obviously, the NYSE is a much bigger platform and a much broader reach than the typical Canadian, junior listed company on the TSXV or CNX or whatever. So, we're somewhat unique in that way. We're also based in Alaska, where our headquarters office is in Fairbanks. We plan to sort of operate out of Fairbanks. That's where I live. That's where most of our team lives. So, there's a number of kind of unique things about the company, but I think the most unique thing is we'll be generating about $50 million of free cash flow when we start producing gold next year. So, if you translate that to use the 10 million, because that makes it easy math, 10 million shares, that's $5 a share. That's pretty decent cash flow for a junior company, actually for anybody.
Yeah, not too shabby. And that's one that I'm looking forward to on my list of questions is what the heck you're going to do with all that money. But we'll get there. So maybe just to clear off the slide deck thing. I mean, you got Manh Choh, you got Lucky Shot. We'll focus on Manh Choh first here. But any debt that we should know about? What's your debt load like right now?
Yeah, so we have a $70 million line of credit with ING and Macquarie. We've used about a little less than 20 million of that to date. I think we've got plenty of capacity there because, as I said, we're mining now. So basically, the draw on the debt is to fund working capital. And it's the first round of processing. We'll batch process the ore, so that's maybe something just to point out. The plan is to batch process for about a month, once a quarter, or from Manh Choh through the Fort Knox mill. And that first batch will go to fund ongoing working capital, because you obviously got to pay for mining and transport of the ore. But then after that, we should be receiving dividend checks from the joint venture. So let's say, somewhere in the middle of the year, we'll start actually accumulating cash. And then, so the next question then is, what are you going to do with that?
Yeah. And well, I don't want to skip. Well, maybe we should just skip to that, because that's where I want to go. But no, let's kind of try to do things in order here for the sake of the people listening in here. But so yeah, Manh Choh, right? This is your flagship, right? It's awfully exciting that it's just months away from first pour, months away from actual cash in your pocket. Do you just want to give us a brief rundown? I mean, I guess start at the beginning, history of the project, and the history of your ownership and how it came to be.
Yeah, so this is a true grassroots exploration project. It kind of got started a bit oddly in the sense that the project is located on tribal land owned by the Tetlin tribe, and they had the idea that there may be oil and gas on their property. ConocoPhillips was seriously contemplating connecting the Alaska gas fields up with the northern British Columbia gas fields and building a giant LNG plant. This was in the early 2000s. And so with that sort of background, the tribe said, maybe we've got oil and gas on our land, which the pipeline would have gone right straight across. So they reached out to some folks in Texas, literally Texas wildcatter types, to come up and evaluate their lands for oil and gas, which they did. And they quickly determined that these were mostly high-grade metamorphic rocks underlying the tribal lands, and so they had zero potential for oil and gas. But the tribe and the guys from Texas got along well, and they said, well, what about exploring for minerals? And so they basically pivoted. They hired a local Alaska geologist who happens to be one of my best friends, Kirk Freeman, who runs at the time ran Avalon Development. They engaged Avalon Development to explore these lands for oil and gas, for minerals. And this, again, what's somewhat unique again, this land had never been open to anybody to explore for anything before this. So Kurt and his crew were really the first people to do grassroots exploration on this rather large block of ground. It's, just to put it in perspective, 675,000 acres. Which is roughly the size of Rhode Island, the state of Rhode Island. That's a small state, but it's still a state. And so, Kurt and his crew did grassroots stream sediment geochemistry follow-up, and over a period of about 3-4 years, they identified what has become now the Manh Choh deposit, which is roughly a little over 1 million ounces of gold at 8 grams per ton. So as a reserve now. So that's where it got started. So originally they self-funded this. It was, again, owned by the oil company. They spun out Contango Ore. And after the discovery, these guys said, well, geez, we really don't know anything about minerals. Thanks a lot, Kurt, but now what the hell do we do? And so they joint ventured the project with Royal Gold, who obviously is a royalty company, but they liked the exploration potential. There's again a huge block of land. The part that had been explored was just less than 1% of the whole project area. And long story short, they formed a 60-40 joint venture with Royal Gold. They advanced it to a pre-feasibility level of study. Then Royal said, hey, we're a royalty company. We're not supposed to operate. Let's see if we can get somebody else to operate. But it was a bit of a disadvantaged arrangement because they only own 40% of the deposit. And if you're the operator, if you're a new operator, you don't want to buy 40% and have a minority position and have all the responsibility of being operator, et cetera. Mm-hmm. So that's when I stepped in this would be 2019 now, 2020, and rearranged the whole thing so that Royal Gold got a royalty. Kinross, who we knew had interest and who had expressed interest before, and who we also knew had an underutilized mill, we formed a 70-30 joint venture with us basically selling 30% of our 60%, rearranging a few things with Royal Gold, who owned some shares of Contango. We got our shares back, which again reduced our share count, and gave them a royalty. So that's how we've ended up now with the 70-30 joint venture with Kinross. The Tetlin tribe has a royalty, and Royal Gold has a royalty. So everybody kind of got what they wanted and what was sort of appropriate from what they're supposed to be about. Kinross gets a majority interest and is the manager and operator, and it's their mill, and they know it well. It allowed us to sort of, I hate to use the word fast track, but literally there was very little to permit. The mine is located on top of a hill, so there's not a lot of water to impact. That reduces permitting risk. Mm-hmm. And we weren't building a mill in a tailings facility, so that reduced power requirements. We don't use a lot of power because there's not a lot of water, and there's no tailings to manage. And obviously, with no tailings facility, hugely simplifies your permitting timeline and all the levels of risk. I think the NGOs who traditionally look at mining and don't like tailings facilities specifically said, kind of applauded the decision to use an existing tailings facility that frankly has received a lot of awards. The Fort Knox facility has reclaimed fish habitat on a regular basis, so they have a partnership with Trout Unlimited. So there's a lot of just overall good things that just happened as a result of this business arrangement, including obviously for our selfishly for our own shareholders. This got production relatively quickly. So mm-hmm. That's kind of the full story, and we're like to say where we are today, where we're staring down the barrel of production here in a few months.
Yeah, not a bad place to be. I think you did a good job there of articulating all the different characteristics that I think make Manh Choh quite compelling. I mean, maybe I'll ask you just as a follow-up, and maybe just to put a point on it here, but I mean, it's high grade, right? 8 grams per ton. It's cheap as heck, CapEx, sustaining X. But it's quite a short mine life compared to what you might expect Kinross to be traditionally interested in, right? A mid-tier or a major producer, right? I mean, 4.5 years. I guess maybe the answer is in the question, but is it just because it's cheap and profitable, good jurisdiction, no tailings? I mean, why was Kinross so keen to get involved in this particular project?
Well, I think basically to keep the Fort Knox mill running and actually, finally put some grade through it. Not to be judgmental on Fort Knox, but it's a big low grade deposit. So adding, 8 grams per ton to their normal grade, mill grade of, 0.5, 0.6 makes a huge difference in terms of profitability coming out of that mill. Just to put it in context, this doubles the size of production from the Fort Knox mill for Kinross. If you look at it from Kinross's perspective, that's a significant increase. And if you add our 30% in, it becomes a tier one asset. So yeah, it's very important for Fort Knox. And in terms of the 4.5 year mine life, we just got to drill more holes. So when back in that history of the project, how it came about, this was sort of privately funded effectively by Contango friends and family. Officially, it was traded on the OTC, which means that nobody traded it. It was just just only friends and family who owned the stock. It was not a liquid company by any stretch of the imagination. So they had sort of tapped out friends and family, and then that's why they formed a joint venture with Royal Gold. But then Royal Gold said, "Well, wait a minute, hey, we're a royalty company. That's all we really want here." So when we rearranged all that, I think again everybody got what was sort of appropriate out of it. But we had to then transition from a friends and family company to a real listed company. So the first thing we did was get it uplisted to the NYSE American, and then work on getting it traded. Telling the story and saying, here's who we are. Because 2 years ago, nobody knew who Contango was. And we're still, we still have a long way to go to get the story out and people understanding that, hey, who's this company that's going to generate $50 million of cash flow next year? So, that's the situation we're in now, which is a great position for us because sometimes it's good to not be known.
Gives people like me an opportunity to maybe jump in at a little bit of a late stage in the game, so I'm not complaining. But fair enough. Maybe I'll ask you. So again, you're not an operator. It's carried interest rate 30%, and so it's maybe I'll phone Kinross afterwards. But you said there's lots of exploration potential left, and I guess I don't want to kind of set you up to have to make a pumpy declaration here, but like what's left down there, right? I mean, you say that just have to drill out more holes and gain more resource for sure. I mean, are you kind of scraping the edges of the barrel, or do you think there's a much larger system that you can still discover down there, or Kinross rather?
Yeah, so we're in the Tintina Gold Belt geologically as a province, which is obviously has well over 100 million ounce endowment, and again, this area was the first guys on the project doing any kind of exploration work, including USGS and the Alaska Geological Survey and things like that, was Kurt Freeman in this group. So, and they did basic stream sediment geochemistry. They got focused in on the area where the deposit is because it's the closest area to the highway and the closest area to Tok, that's where they based out of. They had a helicopter. This is all kind of rolling hills, kind of interior Alaska country. It's not big mountains. Which means it's also wooded and it's hard to get around. It's hard to find a place to land a helicopter. So it's slow going as far as exploration goes. So there's a we call it the Chief Danny area. Chief Danny was the chief who signed the original agreement with Contango. He passed away a number of years ago. So in his honor, they named that sort of the core area around the Mancho deposit as the Chief Danny area. We have a lot of geochemical anomalies, soil anomalies, geophysical anomalies that need to be followed up and have additional drilling on. Now we're just starting to do that this year, and because when Kinross came on, the whole shift was 100%. Let's make this a mine. So do all the things, hydrology, geotech, etc., waste characterization, environmental studies, to figure out if we've got a mine here and how to permit it. And so we've not done any exploration for really the last 2 years of any real consequence. I think that next year will probably be the first year we get back to doing real exploration focused on drilling new targets. So I'm hoping we'll have like a $10 million exploration program next year. We're certainly going to advocate for that. Nice. I think now that Kinross knows that we have we're mining and we're set up for production here next year, I think they'll be of like mind and want to see a real good solid exploration program. The whole Chief Danny area, where we have a fair bit of information and lots of anomalies to follow up on, only represents about 5% of the area that we have under lease from the Tetlin tribe. So again, it's the size of the state of Rhode Island. So it's a substantial area to explore. And we'll look forward to lots of news flow on that, but probably mostly next year, just because this year has been almost 100% focused on getting the mine into production.
Yeah, of course. So, I mean, a couple of follow-up questions here. One, and I guess I'll just encourage people here. There will be a Q&A at the end, but just one here from Sravinder Murray fits in nicely right now. Just so he asks the question I just asked: how much exploration potential is left? But then he's asking along, which zones in particular do you find maybe it should be particularly enticing?
Well, the one the one that's like most obvious to an exploration geologist is you have, and I'll use my hands here, you have two, the north deposit and the main deposit literally dip towards each other. And they're kind of moderately dipping. They're not like vertical. They're moderately dipping towards each other. And the center hasn't been drilled. The middle, where they project towards each other, hasn't been drilled. So that's an obvious target. Now, part of the reason why you might say let's delay on that is because they may well be out of the depth of what is mineable from an open pit. So then it would become an underground scenario, which you probably wouldn't get to until you establish the pits. And then maybe you'd ramp down and go get it. So, there's some logic as to why that hasn't been drilled yet. But that's a good example. It's right between the two known deposits, and it still hasn't been drilled because they're deeper holes. And when you're allocating budgets and you're saying, well, do I want to drill a 700 meter hole, or do I want to drill 300 meter holes? So those are the kind of things that there's lots and lots of targets. I like if you look at our website, there's a map there that shows the geochemical anomalies, gold in soil anomalies. So these are first order anomalies all around the Manh Choh area, the Chief Danny area, and there's literally a dozen high quality geochem targets, some are coincidental with geophysical anomalies that need more drilling. So I think that's probably the first order. We've done a number of geochemical surveys, or expanded the geochemical surveys towards the south now, and there's lots of anomalous areas to follow up there as well. So I've the typical mine that goes into production from feasibility usually has 3x of reserves that end up getting mined. That's your typical mine. So I'm as an exploration geologist, which is what drives me. I'm very excited about the exploration potential on the rest of the lands surrounding the Manh Choh mine itself, on the Chief Danny area, and then on the rest of the Tetlin lease as well.
Well, I think you kind of did a good job there explaining something you already touched on, but you kind of you've jumped the queue a bit with production, right? That a traditional junior drill, get that mine plan, open pit, go underground afterwards, right? But yeah, you kind of interrupted that, and then now we're going to production, and then we'll just keep going, and we'll figure out the mine plan after. No, yeah, it's a neat story, and it's one that I think that there's a lot of very compelling reasons to be here. Just one
other point on that.
Yeah,
another part of the reason why you can sort of jumpstart the thing is because of the grade.
Yeah.
Because when you have quick payback, the payback on this thing is ridiculously short. So when you have quick payback, you don't need to have a 10-year mine life. Obviously we would all love to have a 10-year mine life, but that would mean I'd have to drill twice as much as I've already drilled. And that costs money, and that delays production. So, grade's king, and that's why grade is king, because you can get things going quicker with grade, and you don't need as much to get the payback there. So
Well, and so yeah, and well, thank you for that kind of further detail. There's a great transition here, but I do want to ask just because it came up in my mind. So you kind of mentioned that you're still discussing, you're discussing and providing support to Kinross, but how active is that? You're 30 in the 70/30 JV. How active? I mean, is this a day-to-day thing where you're chatting with Kinross, or have you kind of transitioned your attention to Lucky Shot or other projects?
Yeah, sure. We have quarterly meetings with Kinross, joint venture meetings, and then we, just have sort of, I'd say there's probably not a week that doesn't go by that I don't have an interaction with the general mine manager at, both at Fort Knox and at Mud Show.
Yeah, okay.
Which is actually the construction manager now, but it'll transition here in the next few months to the mine manager. But it's a good open dialogue. There's a bunch of great people. They're all, most of them are my neighbors in Fairbanks, so I know most of them just separate from the joint venture, if you will.
Go over and borrow a cup of sugar, eh? Yeah. So, question. I mean, this is maybe my favorite topic of this one. I mean, I'm excited to talk about Lucky Shot as well. But I mean, 50 million US of free cash flow starting in, like you say, I mean, quarterly, you're going to get $4 or $5 million. Like you said, if you're doing monthly batches, I mean, you are not long off from having a very healthy cash in your pocket every month. And I mean, I think you're trading, this is just going to be off the top of my head, I mean, maybe at 4x that number, right? So I mean, to me, again, you talk about the value here, value proposition is quite compelling, but what the heck are you gonna do with all that money, right? So I mean, I've got A, B, C, D, right? I mean, and you can tell me if it's one of those or none of the above. But I mean, are you going to try to seek a buyout from Kinross so they can disclose that 30%? Are you going to become your own development company and use that to try to develop and bring things under production? Dividends, or maybe, or are you going to use that free cash flow to explore other projects without dilution or something else, right? I mean, I guess, what are you doing with all that money is the short answer to all that. Yeah.
Yeah. So I think we want to use this platform to build a company. So, and Lucky Shot sort of fills that next tier asset. It's not a big asset, but it's high quality, it's high grade. At close to ½ ounce per ton is what we've outlined in the initial resource. It just needs more drilling. We decided to take a slower path and not try to rush things, just to be prudent on capital management. So we're on hold right now in terms of drilling and underground development. We're going to pick that back up next summer when it's a lot easier to do that. It's probably about 30% more cost to do stuff in the wintertime in Alaska than just waiting for the summertime. Once we're set up, then it's not so bad. But Lucky Shot represents a sort of a tiered platform to asset to build on our production. Again, we envision that we can develop the mine there and have a run of mine ore hauled up to the Fort Knox mill for processing. We don't have a deal with Kinross on that yet, but that we know they still have a big mill, still a big hungry mill. So the ore would be really simple. It's quartz and gold and a little bit of sulfide, so it would be very compatible. We have the advantage on the near Lucky Shot. We have the Alaska Railroad, so it's less than 20 miles from the mine down to the railroad. A short truck haul, put on the rail up to Fairbanks, and the short truck haul up to Fort Knox. So that's a plan. We've got to execute the plan, which is getting the drilling done. Our objective is to outline a 400,000 ounce resource there and develop a mine plan around that might be sort of 30-40, start out at 30-40,000 ounces of annual production and maybe grow that to 50-60. Again, not big, but it almost, you put a plan together where you could almost double your production for a very little capital. You're probably talking in the neighborhood of $25 million to do all that.
Yeah.
So, wow. It's not big, but we could self-fund that and we'd be producing over 100,000 ounces of gold with 10 million shares outstanding. So, and probably comparable all-in sustaining costs to Manh Choh. So, but beyond that, so that's something we own. It's in our portfolio. We have a number of early stage assets that we'll advance slowly. We're not going to go spend $20 million on any one of our assets right now. but we also only have 10 million shares outstanding. And if you look out in the field of what else is out there, there are a number of mining companies, junior exploration companies that, they're in tough shape. It's been a tough number of years for the junior exploration sector. And, so we'll start to look at other opportunities as well and see if there's a good fit. I like it's a bit of a hybrid royalty model in the sense of having an asset where you can quickly get it into production or take advantage of somebody else's mill and or somebody else's desire to build a mill and retain a minority interest. It's not very different from the royalty model. In fact, it's very similar to the royalty model. So that's why I think that's the model we want to pursue. We're explorers and developers. We're not miners. We're not process people. We don't have access to huge amounts of capital. So if we can focus ourselves on things that need 10 to 20 to 30 million dollars rather than $300 million, I think we can be pretty effective in that space. So for right now, that's going to be where we're going to focus. I like the idea of paying a dividend. We're not there yet. First order of business is going to be to repay the debt. Once we've repaid the debt, then we can start looking at paying dividends. But that would be very appealing to me personally as a shareholder. So that's definitely something that's going to be in our mind as we continue to develop the company.
Well, and I like that long-term vision, right? It's not just a one and done where, you chisel it out for 5 years and then you've got nothing left at the end of it beyond just a little bit of cash in your pocket. But you're kind of in the process of empire building then, if I can be a little glib, right? That this is your nest egg with which to move forward and do it again and again and again and get that scale going. It's a clever one, and I guess I was just going to comment really quickly. Having cash in this market is a huge boon, right? It's tough. You feel bad for people, but you can't. They'll cry on their own beer. You've got money that you can make hay with, right? That's a very, very advantageous position to be in. But I guess maybe the question I have then, was this always your plan? I think it's clever, right? You've got this very, very cheap, high grade, kind of smaller deposits within driving range or within a decent radius of Fort Knox or other mills. Did you kind of and then again you're doing this similar sort of thing to Lucky Shot. Was this kind of your plan all along, or did this kind of just fall into your lap? Like how did this sort of I hesitate to call it just an exploration thesis, but exploration development thesis. How did this kind of come to fruition?
Yeah, so like a lot of things, the short answer is complicated. But, the original plan was to reorganize things with Royal Gold and get 100% of the project back. Because Royal Gold had kind of gotten themselves in a position where they owned 40%. They really couldn't sell that. And so the original plan was to reorganize that. Kinross kind of stepped in the middle of that by saying, hey, we'd like to own the whole thing. And but variety of things. This was 2020, so first year of COVID. Markets are goofy as hell. Share prices are going up and down like a yo-yo. Ours, Kinross's, and so we ended up. The original plan was to get 100% and then go have the conversation with Kinross. Kinross stepped in the middle of that. They wanted 100%, but they also wanted to use their paper and wouldn't protect the downside on their paper. So long story short, we really couldn't come to an agreement on selling 100%. And so we ended up with the 70-30. And of course, when I stepped in, the original plan was to get 100% and then go talk to them. So we kind of got there in a bit of a roundabout way. If we had 100%, we would have ended up with more of a 50-50 deal, but we didn't have 100%. We only had 60. So, but so to answer your question, that's how we got to where we were. But that original vision was to get 100% and then go do something with 100%. So with things like not Lucky Shot, because Lucky Shot's pretty small and we own 100%. So I see that more as sort of a tolling arrangement with the mill. If Lucky Shot were 100,000 ounces, it could probably have a different, of annual production, probably have a different discussion. So, but in new opportunities, if we acquire 100%, then maybe the discussion is along the lines of what Osisko's done with Goldfields, and you bring the capital, you bring the mining expertise, and develop our great asset. And of course, you look back at my history, that's what we've done with Nova Gold. That's a 50-50 with Barrick. We did that with South 32, with Trilogy. We did a little bit different arrangement, but it ended up something similar with Sandfire down in Montana with a company called Tintina Resources, where we found a nice high quality copper asset, and then partnered with Sandfire. So it is a bit of a model, if you will, that we like exploration, we like development. We think we're good at that end of the spectrum. Mining is not my thing. So if we can partner with the bigger companies who excel at that and who have the access to capital and expertise to mine and permit, and that seems like a good partnership to me from as an explorer, and how to stay in there for the longer term and get the cash flow. Getting the first one is the biggest step. Building on that with what we think we can do with Lucky Shot. But then, so the next one would be acquiring a property that has, where maybe we spend $20-30 million over a 2-3 year period to make it a 5 million ounce gold deposit that somebody else then can come in and bring their capital. Again, I think the Osisko guys have done that well with their asset and the joint venture with Goldfields.
Yeah, excellent. Tony's got a good question here. I think dovetails nicely into this conversation. You've spoken positively about Kinross. He was just wondering. I mean, the question he has is, are you open to further partnerships with them on additional projects? And then, is Lucky of a sufficient size to also maybe attract their interest in the end?
Short answer on Lucky Shot. I mean, it is. We're not looking at it ever. From what we know right now, not being a large scale mine. It's got good grade. Like I said, starting up at 30-40,000 ounces, maybe getting it up to 50-60 is kind of what we envision. I look at that more as a tolling arrangement. But there may be other conversations to have with Kinross on that. I think there's certainly a number of ways to go there. But that's sort of, that's kind of our thinking right now. They're aware of what we're doing. Again, we're not. Nice thing about junior companies is everything's material pretty much. So they pretty much know what we're doing, and we have no secrets in sort of hiding it from them. So we'll keep them apprised of what we're doing there when it makes sense, and we have a mine plan that we can say, hey, we think we can mine X number of tons and deliver you this, and let's work out a tolling arrangement. I think we can get there. It is easier from a logistics standpoint having the rail there. That makes it a lot. It's about less than half the cost to rail things up, get it all the way up, including the truck travel between the mine and the rail up in Fairbanks up to the mine site there. So. Yeah, it'll be less than half the cost for transportation, which is a significant portion of the overall cost for by comparison, say, to Manh Choh. So, but yeah, would we consider other things with Kinross? Sure. Then they've got mines across Nevada, and so we're not going to Africa. I'll say that right away. I think quite like North America, so. I think I define North America north of the border right now. I think that's going to be the playground, at least for right now, that we'll take a hard look at.
Yeah, I had another. This is a ways back, but it's something he said in one of my interviews that stuck out to me. Is you can't choose where the gold is, but you can choose where you look for gold, right? And I think that, I mean, for all the reasons you just expressed, I mean, having a railway, I mean, the level of infrastructure. I mean, Alaska itself is obviously a great jurisdiction, and I want to talk about jurisdiction, but I kind of thought we maybe just keep going with Lucky Shot. Before we had a couple minutes to chat before we went live here, and you were talking about the Lassonde curve and the orphan period, and I kind of like it because you're not a Rolling Stone gathers no moss. You are not standing still with and kind of hanging your laurels on Manh Choh. I kind of said that, heck, you're 9 months from first pour. I think the orphan period's over. I mean, I think that you can't help but see a re-rating here to more to effective valuations or fair valuations. But you had said that your company focus was to avoid that orphan period, avoid that steep, the cliff of the Lassonde curve as much as you can. And you're doing that by, like you say, like you're 9 months from production when you still have half a dozen other, exploration level projects to keep going with. Chief among these is Lucky Shot. So, I mean, past producing mine, I guess maybe can you just give us like maybe the elevator pitch on Lucky Shot? We've touched on it a bit, and I think people probably have a sense of it. But yeah, where is it at right now, and what's your understanding of it?
Yeah, so basically, this is a historic producer. It produced 250,000 ounces, high grade. It was selectively mined and probably hand cobbed. So they produced an average grade of about 40 grams per ton, about 1.5 ounces per ton. So super high grade stuff. Narrow vein mining, and again selective. And it was shut down by President Roosevelt when he used the War Act to shut down all gold mining in the United States. And you tell people that, and they're like, that really happened? You're like, yeah, that really happened. So it wasn't shut down. It was shut down administratively, not because they ran out of ore, not because they hit a bunch of water, couldn't pump the water, whatever. It's just like, hey, you guys, we don't need gold mining anymore right now. And besides, we're going to reprice gold here shortly. So,
little history lesson, hey? Yeah.
So that's why we shut down, and then like a lot of these mining districts, they get broken up into different families, and the kids are like, what do I do with this mining thing? So it took a long time for the underlying owner to put the land package together. He was very diligent and successful at doing that, and so that's the business arrangement we have is with him. And he lives out in the neighborhood, so he's a neighbor. So it's and the infrastructure was, as I said, it's great infrastructure. You're 20-minute ride down the hill to the railroad and the highway, and so it's easy to get things in and out. We do get a lot of snow. It's definitely we're up in Alaska, and it definitely snows for half the year. You can manage the snow if you just stay ahead of it. It is more costly, but once you're underground, where you drill. So now we put the underground infrastructure in place to drill, to explore, not from a mine development standpoint, from an exploration standpoint. And now we just got to drill. So we'll pick that back up in the summertime, and objective is to outline about 400,000 ounces. And then develop a mine plan around that. We figure if you're mining 40,000 ounces a year, that's a 10-year mine life. That's plenty of runway. Well, obviously, when we have a mine plan, we'll sit down and talk with the Fort Knox folks and hopefully work out a tolling arrangement. There are other options. There are other mills in Alaska, so Fort Knox isn't the only game in town. It just happens to be the biggest one. They have a big mill. The other, the point you made about infrastructure, I wanted to sort of follow up on, because what we are not going to do is go out in the middle of Alaska and remote Alaska and find, invest $20 million hoping that we can figure out how to get the infrastructure. I did that 25 years ago with Donlin. It's a fantastic deposit. It is good grade. There's not a lot of 2+ gram 50 million ounce gold deposits out there. So it's a fantastic deposit, but it is in the middle of nowhere. And so here we are 25 years later. I left NovaGold in 2011, formed a new company, found 2 new deposits, joint ventured those with South 32, and Donlin is still permitted. So yeah, I don't want to do that again. New credo, stick close to infrastructure. There's plenty of places in Alaska to just be 20 miles from the roadside, and there's lots of good exploration potential there, because the fact is most of the roads that exist in Alaska exist because of mining.
Yeah.
So, and obviously we're not just going to be restricted to Alaska. We know that well. It's in our backyard. We pretty much know everything that's going on there. But I like Idaho as a place to look. Nevada's always great. It's tough to get land position in Nevada, but there are still opportunities there, and those would be two standouts. California a little tougher, Montana a lot tougher. Arizona's always a good place to work. So there's plenty of real estate to look at in the U.S. and new opportunities for us to look at continuing to grow the company. As you say, sort of once you've got production, that sets a base level of value. Now, obviously, it fluctuates up and down with gold price and how well things are going or whatever. But we're on that cusp now of being rebated and valued on their cash flow. And so now the thing is, what are you going to do with that? So I think Lucky Shot's an easy slip in to that same model, because it's not huge capital. We know how to execute the plan. So it's just drill a lot of holes. We're just drilling down dip from where they mined high grade gold before. So geologic model wise, it's not complicated. It's a quartz vein and a granodiorite. How much does it cost to mine it and develop it? Obviously we've got to do work there, but grade's king. So when you have close to half ounce per ton, that's a good grade to work with. And again, not building a mill and tailings facility, that gets rid of the valley of death, or at least shortens it hugely. We're fully permitted for mining. We're mining now. We're just not mining ore, right? Or I shouldn't say now. It was a few months ago, but we are fully permitted to mine. So if we mine and put ore in a box and haul it down to the rail and haul it up to Fairbanks and then haul it up to the Fort Knox mill with a truck, there's costs associated with that, but we know we've got a really good idea what they are, and they're less than Manh Choh. And Manh Choh is 8 grams per ton. So what is our mining cost? So it's none of this is horribly complicated. And that's the other thing I want to try to focus on is less complications, really simplify permitting, and really simplify, how to have this discussion with whether it's offtake tolling arrangement. We can deliver this many tons of this grade. That's what Fort Knox would like to know, obviously. To work out a tolling arrangement with us.
Yeah, I mean, I think it's clever as heck, right? I mean, for all the reasons you just explained. I mean, if it's cheap, Manh Choh is already. I mean, is Manh Choh around what's the ASIC on that? Is it $1,000? No, what was $750?
11, little over 1,100.
$1,100. I mean, so a pretty good ASIC, right? And I mean, so just cash in hand every single ounce. I mean, you've got higher grade but cheaper. And I mean, you say it's only a 500,000 ounce deposit. I think sometimes people, we get used to these, 5 and 10 million. We get used to these larger ones in terms of how we do our, at least I do in terms of my mental calculations for value. But I mean, for you, 65,000 gold equivalent ounces coming out of Manh Choh once it's going, if you can get Lucky Shot up and going at the same time and take it up to north of 100,000 ounces, suddenly you're not a bad little production company, right? Even though your actual, like no tailings, no milling. Like it's a good story. Maybe my question is, so what's the time, just on Lucky Shot, what is the timeline, right? Not like a realistic, things go reasonably well. When do you think you could actually start seeing ore sent off to a mill?
Give us a couple of years to put a mine plan together. So, a little over a year to get it drilled and the underground development in place to do that. And then another year to execute that and put a mine plan together, and then with that, then we can sit down with the folks at Kinross Fort Knox and see if it makes sense to send it up there.
Start to talk turkey. Yeah. So we have, I want to make sure that I stop on the hour here. I got 10 minutes. And so, I mean, I've been enjoying our conversation. I'm going to have to skip a couple of things I want to talk to you about, but jurisdiction, the one question I do want to ask you was when you were kind of referenced the other places that you were maybe willing to look at. I mean, I'm also jurisdiction is a big thing for me, right? I don't go anywhere in the world. I mean, I just think that there's so much risk already. Adding more above ground risk it's not my cup of tea, right? But I noticed it was all American states. None of the, I mean, I'm a Canadian, so now I'm offended, right? But is there a reason why you're sticking purely to the USA and not Canada, or just because you know the process, or why is that, or is that just a coincidence?
Yeah, no, I just was talking about things that just kind of focused on the U.S. No, we like Canada. I think BC's got a great jurisdiction. All of Canada's a great jurisdiction. I'd say again with the caveat that it's close to infrastructure. So NWT and Nunavut, probably not. And we have no particular advantage there. Yeah, I think Ontario, Quebec, it's not. There's things in Manitoba we would take a look at for sure. A little less in Saskatchewan, but there are there's certainly some there. Alberta's not probably not high on the list, but BC certainly is, and we've worked a lot in BC before, so that's a jurisdiction we probably feel really, really comfortable with. And going all the way out to Newfoundland, Labrador. So yeah, Northern Europe is probably another place we'd probably take a look. From a jurisdictional standpoint, good rule of law, traditional. Finland, Sweden, Norway were always traditionally mining countries, and they've now, with the adaptation of we've got to transition to the green new economy. They're really re-embracing mining in a big way in Northern Europe. So I think Spain and Portugal would probably be partly added to that list, and then the further east you go, the more complicated it gets because the closer to Russia you get. So and that sphere. So
just talk to Kinross about that one, eh?
Yeah.
Well, yeah, no, interesting. So, I mean, I think that you make a really good point about Europe kind of rediscovering mining and the necessity of it, right? So I think that there's opportunities there too, for sure. That's an interesting point. I actually have a good one here. Tony and I kind of had the same question for you. So the way that I had phrased it, I mean, is I kind of discussed like hard versus soft permitting, or like the actual government process of achieving a permit and all the consultation that requires, but then also that buy-in from local communities, right, and community engagement process. It is huge in modern mining, and it's something that I actually mining has when you talk about jurisdiction, right, you look at other countries, very mixed bag approach. So in terms of the history of what mining did to those countries or regions, and so I do get it, right, and I think I'm supportive of this new process. I guess, do you want to just discuss like your company's approach, your efforts, how long was it? And then, I guess maybe it's going to be two questions in one here, and I try not to do that, but how much, obviously Alaska's permitting process is pretty advantageous to begin with, but then, what were you doing, in addition to or concurrent with that in terms of reaching out to local community engagement process?
Yeah, I think the local community engagement, and regardless of whether it's an Alaska Native or not, is meet early and often and listen, sit down and understand what their concerns are. The risk when you meet early is that you don't have a lot of answers. So when you have a lot of people asking questions, but it's also your opportunity to sort of manage expectations, because on the flip side, you got a lot of people who are interested in jobs. I mean, mining jobs pay a lot. In Alaska, I think we're up to about $110,000, $120,000 a year average pay for a mining related job, which is a really good salary. And so on the one side, you want to manage that so you don't get people thinking this is going to happen tomorrow. And then on the flip side, you want to understand what are the kind of hot button concerns of the community in terms of, and I'll tell you that there will always be around water quality. That's always a big one. So if we have a plan not to build a tailing facility, you just took a huge risk off the table from the local community's perspective. And of course, not building a mill, you take off air quality, which is you're going to build a big diesel plant. Because we're not connected to the grid. There's very little grid in Alaska. There's a grid between Anchorage and Fairbanks, and that's it. It actually goes all the way down to Homer. But And there's everything under the sun on the thing. We don't have nuclear in Alaska, but we've got hydro, we've got wind, we've got solar, we've got coal, we've got gas. It's a good grid, but it's just really small and isolated. So if you're going to build a mill in a greenfield area, that's then you need a big air quality permit. So, and those are not easy to get. So they're as difficult as a water quality permit. So if you can take those things off the table or reduce their impact significantly to the community, that's a big thing. So I think approaching or meeting early and often is a big thing. Again, regardless of whether it's a Alaska Native community. In the case of Tetlan, there are specific areas where we can train and bring local jobs and have a dedicated effort to do that. Not just talk about it, but actually do it. It's not a box ticking exercise, which unfortunately I think ESG is sort of formulaically become. Which I think is why I think a lot of people are sort of questioning the whole ESG mantra now, which I think is good because there's good things in it, but it was kind of becoming just greenwashing for the big companies. So, but in terms of mining, this is all boots on the ground stuff. When the exploration representatives for a project are the first interaction that local communities have with a mining company, and you're an ambassador for the industry when you're out there moving a drill rig on, whether it's moving a drill rig on the property or doing a drone survey or having a helicopter fly over. If you meet with the community ahead of time and they go, hey, well, moose season is in a month, we'd really appreciate if you didn't, fly your helicopter and scare the hell out of all the moose because we're going to go shoot some. So those are simple things. And they're not complicated and they're not hugely expensive to sort of avoid, sort of a natural setup of, I didn't get a moose this year because you dumb shits were flying your helicopter.
Yeah, absolutely. And I think you're making a point well made, right? I mean, it's the pursuit of best practice and understanding that this can be mutually beneficial for all parties. Like you say, like that the greenwashing and then just kind of saying things for the sake of saying things. I think it's a very cogent point. Yeah, I've actually, it's funny, I got a Quebec nickel explorer who they have ceased drilling for moose season right now. So here I am waiting for the drill to turn because because how else do you achieve that community buy-in? We got 4 minutes here. I kind of want to leave chance. So just one last call for questions. I think I managed to kind of cover all the questions that people have, but maybe just I want to ask you to have final thoughts, but maybe just, do you just want to, and we were kind of discussing community engagement and such, do you just want to discuss, like, what does Manh Choh mean to the Tetlan? I mean, how important is this to their community that this is kind of up and running or about to be?
Yeah, well, literally Manh Choh means big lake, just to address that. And so the large lake that is the center of their community, we named the project in that honor, just to constantly remind us, don't screw up the lake. Whatever you do here, don't screw up the lake because they fish in it, they live on it. That's where the water comes from. But in terms of economics, the tribe will receive a royalty. It's a 3% royalty, so it's a pretty healthy royalty. There's about 300 people in the tribe. About 150 are live on the Tetlan lands and at the village of Tetlan, and the other 150 are kind of scattered around the other local communities. So that's a direct dividend to the tribe. And then of course the jobs and training are added benefits. And it's what kind of jobs are these? Well, again, we're not building a mill in a tailings facility, so usually it would take 2 or 3 years to train up a millwright. It takes 6 months to get somebody to get a commercial driver's license, or a truck driver, or a mechanic's license. And a lot of people who live in remote Alaska are sort of natural mechanics. I mean, you got to fix everything because everything breaks. And so these are really good jobs that they have at home, and they love that. It's enhancing their community and the growth there. And that's something that they can transfer. They can take that job and take that training and go work elsewhere. Maybe you go home every other week or something like that. But so those are skills that are very transferable. We've got young kids who want to become environmental scientists or want to become a geologist or an engineer. And those are always, personally great to see because, that's, you're just like, oh man, I'm just making a real difference here. But equally important and probably more important in terms of numbers is getting more people with licensed, truck driver's license, commercial license, and then getting their mechanics rating. Again, those are skills you can transfer everywhere.
Yeah, building your workforce from scratch almost up there, kind of, right? So yeah, we got 45 seconds here on the clock. So if we're going to end on the hour, so I'll leave it to you. Anything that you want to touch on that maybe we didn't get a chance to discuss, Rick?
Yeah, no, I appreciate the discussion. Great series of questions, and check out our website, contangoore.com. We'll keep everybody up to date on our advances. I'll be heading to New Orleans here for the conference down there, and then over to Zurich. If you happen to be in those places, stop by and or just reach out to info@contangoore.com. And if you've got questions or concerns, write them there, and I'll get back to you.
Perfect. Well, I think that just about does it for us on the hour. Look at that, eh? So yeah, thank you, CEO Rick Van Nieuwenhuyse of Contango Ore, and thanks to Six. And I think that's where we'll call it. So yeah, have a good day, Rick. Good luck.
You too. Thanks so much. Bye-bye.
Take care.